Focus in on the cement space. They've been seeing deals galore. There's been a lot of consolidation. How is this going to impact cement prices? Are we going to see smaller players now emerging as big champions? Joining in to discuss this and lots more is Ronald Siyoni, Research Analyst Infra and Cement at Sharekhan, as well as Mangesh Bhadang, who is Research Analyst Institutional Equities, joining in. Thank you so much for taking time out, gentlemen, and good to have you on board. To begin with, Ronald, just wanted to understand how you're looking at the entire cement space with the consolidation impacting the sector in terms of pricing power. Do you think that we're likely to see a few players in the industry leading to pricing discipline or a pricing war? And how would you look at this impacting operational profitability?
Yeah, hi, good morning. So yes, the cement industry consolidation has been for a while now, and post Adani completing, requisite needful for acquisitions of ACC and Ambuja. Now, this small and mid-sized players have already been running up, over the past 6 months in the wake of inorganic expansions, which are possible through larger players. As we see the consolidation, we expect it to be a positive because larger peers are expanding capacities, but it's also partly through inorganic expansion, and not newer capacities are not getting added in a greater extent. So overall, the cement supply may grow in high single digit, and also it would be well compensated with demand, expected to grow in high single digits also. So we see an equilibrium in demand supply dynamics going ahead. Although capacity utilization may remain flatter to marginally higher over the next few years, but this would only lead to better pricing discipline and in the wake of high demand and supply position. So we think the consolidation should be taken up positively overall for the sector.
Bhadang as well joining on the show. Mangesh, hi, morning. Both UltraTech and Adani Group have claimed to become the largest players by 2030. As per your opinion, who do you think would be the largest cement player? Because we can see Adani's being as aggressive now.
Yeah, so the question on who would be the largest, probably, your guess would be as good as mine. The group has stated that they want to double their capacity over the next 5 years, and overall the plan is to be either a larger number two player or probably even go for a number one position. But the growth from the base that we have seen from ACC and Ambuja, it's a very large growth, which probably would take more time to achieve a number one position, and might even put some pressure on the supply that comes in the cement sector. If it happens through acquisitions or if you say inorganic route, then it would be positive for the sector. But currently, uncertainty or lack of clarity is there in terms of how Adani would go ahead and get to that position. So our view is that even if they do say 50% of their total growth plans through acquisition, it would be positive for the industry. If they are not able to do that and probably have to go for organic growth, say through either a brownfield or greenfield plants, then definitely it would add to the huge supply in the market and would be negative.
Ronald, but coming back to you, which do you think are the companies which would be the most likely, candidates to get consolidated? And do you expect it will be the case that the entire companies would be taken over, or do you think this is going to be a bit more piecemeal with respect to specific units of the companies being carved out? Case in point being what happened with India Cements and JSW Cement. Ronald, go ahead.
Start. Okay. So yeah, it can be both. As we have seen, limestone land reserves getting by India Cements getting divested to JSW Cement. So actually, it can be both ways. The companies which are having higher leverage on their balance sheet can find ways of divesting their assets which may not be which are non-core to their current business operations, or which are non-regional specific for their business operations. So such things can happen. There can be divestments of plants which are non-core to the businesses apart from their core regions, and there can be deal with respect to the whole company also, but it's a very unlikely case. Still, it's possible, but all depends on the kind of valuations buyers are able to give and afford for buying such a large capacity for the company. But yeah, piecemeal plants units in a specific regions can is a much more likely event, because larger PL players would also have to take into account, CCI's criteria of, market share, regional market dominance, and everything. So that kind of piece fits well with respect to the acquisitions.
Okay. Ronald, let's also get in your outlook as to what the outlook is in terms of, what would be the key acquisitions targets for some of the larger players, the ones which have the limestone reserves, as you just flagged off, etc. So would it be that? Would it be diversified regional presence, a leverage balance sheet perhaps, or efficient cement plants? What, according to you, would be some of the key acquisition targets for the larger players?
Yeah, as you have rightly mentioned, this few are the key criteria areas which the larger companies would be looking at, where they can increase their regional presence, which are the regions where they can expand or increase their market share, where limestone supply, the plant is having a lesser limestone supply. And for the seller's perspective, how they can deleverage their balance sheet. So, companies like India Cements or Nuvoco Vistas, they have highly leveraged balance sheets. So, they can pair some of this debt with, non-core asset divestments. And this can help both ways, both to the larger players and smaller players equally.
Mangesh, fundamentally speaking, apart from the entire consolidation news, if you just had to look at the fundamentals, how various companies are performing, whether in terms of valuation, whether in terms of their EBITDA per ton, etc., what would your pecking order be?
So in the large caps, we like UltraTech, and then in the mid and small cap range, we like Birla Corp, JK Lakshmi, Boko, and Sagar Cement. Those are the stocks that we like right now, and we have a slightly positive view on the eastern region demand growth, wherein we expect that eastern region should actually outpace others in terms of volumes that they could show over the next 2 to 4 quarters, and that's why Nuvoco, I think, fits the bill with very large exposure to the eastern region.
And Ronald, since we are at the cusp of the earnings season when it comes to cement players as well, what's your expectation of how this is likely to plan out? Is this one of the quarters which could be the bottom for the entire industry?
Yeah, that's what is expected in terms of operational profitability. We must expect EBITDA per ton to be at a multi-quarter low for this quarter, which would be affected by the peaking power and fuel cost. Pet coke or coal prices have been at the peak levels during Q1 FY23, and that would be much more reflected in quarter two earnings. But from here, from post that quarter one, the prices have come down by 20 to 30%, which should positively reflect in companies' earnings from quarter three onwards. So overall, for the sector, we expect a healthy top line growth of 14%, contributed by 11% volume growth and 3% realization growth YY. But EBITDA per ton, should be lower by 35 to 40%, both YOY and QOQ, at 716 at weighted average basis. So this should dampen the net earnings. But from here on, from quarter three onwards, we should see the healthy demand environment coupled with the reduction in petrol, pet coke and coal cost to get reflected in positive improvement in operational profitability from quarter three onwards.
Okay, Mangesh, Ronald, both of you, thank you so much for giving us your insights in the cement space, given that the M&A street is definitely heating up when it comes to cement.